earnings action to bring you shares of Roku and Coinbase higher after posting revenue beats. Block jumping after raising its full-year outlook. DraftKings lower on a revenue miss. The company also announcing a $1 billion share repurchase program. And Booking Holdings reporting a beat on the top and the bottom lines. And let's check on shares of Apple as well as Amazon. Apple shares are down by more than 2% right now. Amazon down by a little bit more than 5%. Deepwater Asset Management's Gene Munster has been all over these calls. He's that talented, 2 calls at once. Gene, what do you make? Let's first start off with Apple, because our traders here are making the point that we're not really going to get much clarity in terms of the power of the upgrade cycle, the power of AI to the upgrade cycle until possibly next year. So what do we do with the results at this point?
Well, you have to kind of look at the guidance here, and just want to emphasize that even though that's the reality, is that we're not going to know until next year how this AI plays into the power of the next cycle, the next 2 years, is investors are hyper-focused, an understatement, on anything that they can glean in terms of what that looks like. So when Apple just guided for revenue to be up about 0.5% in September versus where the street's at, and earnings in line, some investors read that as a slight disappointment. And the reason is that they'll get that kind of captures probably 2 weeks of the new iPhone revenue. And in those 2 weeks, it doesn't sound like a lot of time, but probably 40% of the iPhone sales come in there. And so effectively, I think Steve Kovac's setup was right on when he said Tim Cook really doesn't know what this is going to look like the next cycle until they see what actually happens with orders. And I think investors kind of wanted to see a little bit more. But you're right, Melissa. Investors are going to have to wait. That doesn't change their anticipation and wanting to try to glean any sort of insight into how this cycle is starting to gain traction.
Gene, services revenue was a bright spot, I think, and one of the reasons you can wrap your head around valuation now, approaching 30% of overall, 28%, which is, correct me, but I think that's the high that I've seen. So thoughts on that?
Services has been the big surprise. We've seen an acceleration. It was, call it 10, 11%. Now we're up to 14%. They guided for services revenue to be a similar type of growth rate as we've seen over the last 3 quarters. So it's probably going to be about 13% in the September quarter. And that's like impressively resilient given all the things that have happened around developers and take rates and what's going on in Europe and some of those changes. And so I think what it points to, Guy, is just the resiliency of that business. And I think that investors can sleep well knowing that, you know, this concern that the services business is going to somehow move in a bad direction, we're just simply not seeing that. It seems to be in a great place. And as part of that, too, just quickly, is that they did reiterate that their active base hit a record level again. They didn't give the specific number, but that also plays into the services, and the flywheel is just working.
Gene, in terms of Amazon, is the guidance that was disappointing. So for you, what precisely out of the guidance was disappointing, and how come we are seeing such a difference between what Amazon's reporting in terms of what they're seeing in their ad business and what we've seen from a Meta or even an Alphabet? And why can't Amazon, or is Amazon employing AI tools to improve that stream of high growth business for them?
Well, they are using AI. I think it's a lot related to recommendations, of course, and they're doing some around logistics. And to answer your question of kind of what's the disconnect between what's happened with Meta and what's happened with Amazon, is I think Amazon's a better just breadth of the broader economy. I think that they tend to be kind of skew in line and maybe slightly lower in terms of the average income of a customer. And so I think that you're just seeing a better breadth of what's going on. I think probably a little bit of a slowdown in the ad market has impacted that advertising business. As far as the kind of the bigger picture around Amazon, what's on my mind, obviously AWS, everyone's focused on that, but I'm thinking about it in terms of like, where do they really fit in terms of control of AI? And in their case, they're really partnering for this and doing things with their investment in Anthropic. But I think that there are still some big unanswered questions when it comes to Amazon and how they're going to fully take advantage of AI. I think it's a very different conversation than what Google and Meta talked about, for example.